welcome to Business Today India Today Budget Roundtable. Joining me in Central Delhi just few hours after the Big Bang budget is Secretary Revenue, Mr. Arvind Shrivastava. Thank you very much, sir, for joining us.
Thank you.
Also joining me on this special panel is Secretary DIPAM, Mr. Arunish Chawla. Gentlemen, let me first begin on the revenue front because I think that has been at the helm of announcements today on both direct and indirect front. But before I jump on to the big blow that market got today, and they have reacted on it, let me first start by asking you on the customs reforms that have come in. Since GST, the idea behind the Revenue Department, of course, with CBIC was to simplify the customs reforms. Take us through these and give us your insights on it.
Yeah. So, of course, this is not, it is in the same nature as GST, but driven independently, since customs is purely a union government issue. And some of these things have been in the works for some time. So, one of the reforms which was started a couple of years back was what we call tariffization, which meant that instead of applying duties on goods and commodities through notification, let us incorporate that in the tariff schedule itself. So, references, interpretation, classification, etc. doesn't become a problem. So, this exercise is a continuing one, and we have done this year also. The second part, of course, is specific items on which duty has been rationalized, reduced. All of those are essentially with an objective to improve value addition in manufacturing in India, or encourage our exporters so that they may require some marginal imports to support them to do the exports. The third part here in this is a whole host of process reforms. The process reforms are essentially built on systems of one trust, because customs by its very nature is a transactional system. So, every transaction may result in issues of inspection, interdiction, etc. So, we have tried to see how we can build trust-based systems where an entity becomes the center. And we already have arrangements like authorized economic operators, where a person gets certain specialized treatment from the Department of Customs. We are trying to see if that accredited agency can get preferential treatment in its transactions too. And the risk management system takes care of that kind of an arrangement. A similar entity-based approach is being followed for warehouse reforms, where instead of getting approval for every transaction, we can as well audit an entity, create risk flag based audits rather than approving every single transaction. The second set of reforms which are dealing with it is the ease of doing business kind of reforms, where we are simplifying processes, using technologies in order to see to it that things are smoother. For example, if somebody is using electronic seal, from the manufacturer's premises, he can straight away get it loaded into the ship. Somebody who is a trusted entity can file his shipping bill, and he will get clearance all the way to get it out of the customs bonded zone if he is satisfying certain parameters. So, this is the EODB kind of reforms which we have done. Third one has been on the SEZ, where we are proposing that because of the current situation, we will allow SEZ's focus will continue to remain on exports. So, this is a one-time window for a limited period, where all that we are trying to ensure is that duty structure does not create non-level playing field between domestic manufacturing and the SEZ entity. So, how much we can then, so that particular thing we will issue in the form of a scheme which will get notified by Department of Customs. So, we are working on it. It will take little time for working out the details, maybe over the next 1 month or two, and then we will notify after that.
Okay. I completely understand, sir, that these may not have been an over the night attempt, and a lot of work has gone into this. We've seen what happened with rationalization, or if we look at how about there was a direct tax reform in the last budget. But would you agree that in the backdrop of what is happening geopolitically and change of trade relationships, probably the idea to push domestic consumption through these reforms held way more important to be introduced right now?
Domestic consumption, if you look at as far as the customs duty changes are concerned, those changes are largely dealing with not consumption items, but for improving production, more manufacturing, more value addition, whether it is aircraft manufacturing or it is solar panels or whatever. As far as the other part is concerned, we are encouraging our exporters to expand their horizons, and we are making customs processes simpler for that. Consumption related issues is what we tackled at the time of GST, where the rate rationalization exercise also gave avenue for improving or enhancing the consumption and we are seeing the effect of it happening as we see it in the revenues also. So this is the broad picture that is available.
Perhaps I conveyed it. I should have rather asked if this is being done in the backdrop of making trade deals easier and cross-border trade better.
Yes, of course, it is meant to, the process reforms are meant to make cross-border trade better. It is meant to remove the procedural hurdles which may prevent a small guy or a person to, look beyond.
Yeah.
So that is what the process is all about. But it is irrespective of trade agreements. Trade agreements, definitely it will contribute to. But it will contribute to our ability to export out, or ability of our businesses and industries to export out. And the process is not coming in the way. In general, it will contribute to that. Obviously, when it comes to trade agreements, that will also be a positive sign. But trade agreements have a nuance far beyond. The processes will apply to everybody. Trade deals are more about gives and takes, which will be specific to that deal.
On the macroeconomy, you are right. Sir, in terms of the changes that you have got when it comes to STT on just futures and options, you have mentioned that the rationale has been to do away with the skepticism in the market.
With speculation.
With speculation in the market, apologies. How worrying has this been, and since when has the department been kind of studying? Because if I talk about numbers, I was being told that it's about 500 part of the GDP.
Yes, the number is large. We are only, tax department is not the ultimate arbitrator of a regulation of the market. We have the tax policy is only supplementing, or so the STT rates were revised some time back. And this rate has been revised only on futures and options this time, with this dual objective of raising the revenues and to some extent curbing the speculation.
Okay. Sir, I will come back to you more to talk about the changes that have been introduced on the tax front. But Mr. Chawla, let me drive this conversation towards you. Time and again, you have also emphasized the fact that we are not doing, we are not focusing, and we have done away with the whole concept of disinvestment target. But if we look at the miscellaneous capital receipts, we are looking at 80,000 crore for FY27 and a revised target of close to say 33,000 crore for this year. What has gone and what has been added?
Targets are targets. And as I said, DIPAM follows a composite asset management strategy, which means we do not split up targets, because splitting up targets and putting it out in the market domain creates a price overhang and creates distortions, and sometimes affects the value realization. You will see a large target next year, and that is because of our aspiration and our confidence that we've been able to put together a framework which can achieve it. And the composite framework includes not just traditional type of strategic disinvestment or traditional type of land sale or monetization. It also includes new forms of asset monetization, like the public InvIT, which the first one we announced in December. We got a market approval, and we hope to launch it before the end of the current financial year. And we take it forward to the next financial year. Honorable Finance Minister also announced a REIT for public enterprises for monetizing their surplus land assets, which is a new securitized instruments that will enable monetization of the present value of rental revenues and redeploying it for recreating and redeveloping the same asset. So that nothing goes from the budget, nothing goes from the enterprise, but we are able to redevelop a surplus land through capital market instruments. So all these new and innovative forms of monetization put together have given us the confidence to project a larger target.
So since both of you are on this panel, I see that the non-tax revenue estimate has increased from 5.83 lakh crore to say odd 6.16 lakh crore. We're banking big on dividends and disinvestment, right?
So the certain parts of it which Secretary DA would answer, I would refrain from entering into that domain. But as far as the dividend and profit of public enterprises is concerned, you see in the 12 years, we have more than trebled the dividends that flow to the government. And as you know, the last year record dividends of nearly 1.4 lakh crores was distributed, and almost like 40% of it is distributed to small minority stakeholders. Public enterprises and their assets have become attractive in the market because of a fair, consistent dividend policy. All public enterprises respect minority stakeholders. And as part of Honorable Prime Minister's vision of sharing the wealth of our enterprises with people, we've taken the best step forward. 30% of profit after tax, or 4% of net worth, is distributed religiously with the minority stakeholders. And that is why you see public enterprises as star performers. You see mutual funds making portfolio based on public enterprises. It is a strategy that has worked. And going forward in the next year also, we hope to achieve 75 to 80,000 crores as dividend and profits from public enterprises alone.
75 to 80,000 crore. Got it. Sir, in terms of the tax front, there was a bit of apprehension last year when the GST rationalization exercise was conducted. You also clarified this in today's press conference that it is only in few months that we'll see also, because the cess part will be countered. So do you think there could be an upward revision of your estimates with better GST collections, with better direct tax collections by the end of March?
You're talking about this year?
For FY26.
For FY26, we have given the revised figure. We have taken into account what has happened so far and how do we see going forward. So that remains our revised number for estimate for this year. Going the next year, we see the tax seemingly more buoyant, especially because we have now taken into account this correction and the growth which has been seen so far. And that is the figure for budget that we have arrived at. So both these figures is what we hold on to in terms of our estimates as of now.
Will the cess loss of, say, around 2 months, sir, if I'm not calculating it wrong, from, say, December until Feb 1st, will that add to some kind of a challenge?
Cess loss in what sense?
Since we have done away with the compensation cess, and now the 40% tax on sin goods comes in from today. So a period of 1 month seems to be empty from the time compensation cess ended.
No, it all happens together. Na? Compensation cess ended yesterday.
And the carry forward.
Yes, it's just straight. There is no gap.
Okay.
So the arrangement, the tax incidence remains the same. Till 31st of December, it was 28% GST with compensation cess and with little excise. And now it is going to be 40% GST with excise, and in case of pan masala with cess.
Got it. So one last question as we come to the end of this interview, and this is what's the roadmap for GST now? A lot of more work to do. Would you agree to that? Because the agenda is something to be talked about. What have the states been pitching to you?
Yes. So now it is essentially the focus has to be more on reforming the process, make it easier for honest taxpayers to comply, for using technology to prevent leakages, for ensuring that the systems of returns, refunds, are for registration, audit, dispute settlements are all reformed. So we are working with the states on that. A consensus has to emerge because it is a collective ownership system. And we hope to achieve that, and once we are ready, we will be taking it for the appropriate decision to the Council.
Okay. Thank you very much for joining us on this special panel. That was a special roundtable with Secretary Revenue and Secretary DIPAM on Business Today.